and welcome to UPL Limited second quarter and 6 months ended 30th September 2021 earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Radhika Arora. Thank you, and over to you, ma'am.
Thank you. Good morning and good evening, ladies and gentlemen. Thanks for joining us today for the results for the quarter and half year ended 30th September 2021. On this call, we will be referring to a presentation that has been shared with you and is also available on our website, and we take as having read the safe harbor statement. From the management, we have with us Global CEO, Mr. Jay Shroff, Global CFO, Rajendra Darak, COO, Carlos Pellicer, Global CFO, Anand Vora, Raj Tiwari, Global Chief Supply Chain Officer, and Farokh Hilu, Chief Commercial Officer. We will start with a brief overview from Jay, followed by a business update from Carlos, and then a financial update from Anand. With that, let me hand it over to Jay.
Thank you, Radhika. Pleasure to talk to everyone today. It's been a challenging year, as one can imagine. Lots of volatility in almost every sector we can imagine, every aspect of our business, particularly running a business with a global presence. There has been a lot of sleepless nights for our whole team, but they've done an exceptionally good job, as you will see. On the ESG front, I'd just like to cover some highlights. Reimagining sustainability is a key focus of UPL. Over the last 5 years, we have reduced water consumption by 21%, carbon emissions by 26%, waste by 45%. In the first half of this year, we have reduced carbon emissions by 4%, water by 18%, and waste by 29%. And we keep investing in technologies and ability to reduce waste and improve our ESG across the board. We've also signed the Climate Pledge, which is a commitment to reduce our carbon footprint and by 2040 to zero. We've also launched the Gigaton Challenge, which is to reduce CO2 in the atmosphere by 1 gigatons by 2040. This is using agriculture as a key tool to decarbonize the world. We will mobilize 100 million hectares of acres through farmers to decarbonize the world. It's one of the most exciting challenges in our sector in the world for decarbonization. Nurture Farm is one of the key initiatives of digitizing the ecosystem for agriculture inputs. Nurture has had tremendous success in the last 18 months. We have onboarded 1.4 million farmers. We've onboarded 60,000 retailers. We have had a GMV of 600 crores in the last 6 months. We have serviced almost 3 million acres, and we have 90% adoption on a digital platform. We have also helped farmers trade 5,000 tons of their produce. We also launched the End the Burn campaign, which actually helps farmers not to burn their crop. One of the key challenges in the North India is, in this time of the year, farmers burn about 6 million hectares of rice stubble. UPL and Nurture, our platform, was able to take a target of 10%, and we are very happy to share that as of last night, we did about 400,000 acres were completed. We will do a little bit more, but we are committed to end this in the next 3 years. We have a lot of requests from the government and other agencies to do that next year, completely end the burning of the rice stubble. NPP is another initiative which we have formed. All our biological business comes through NPP, and we have launched a lot of products, and NPP platform is also doing amazingly well. We have focused on developing biosolutions for all the key challenges being faced by farmers, and that business also is growing. We have signed a long-term agreement with Christian Hansen, one of the key companies in Europe, on biosolutions. They will manufacture products as per our request for some of the challenges we see and research targets we give them. We also bagged the Asian Sustainability Award a couple of months ago. So with that, I'll hand over to Carlos to give you a business update. Thank you.
Thanks, Jay. Good evening, everyone. I am pleased to join you today and present our financial results.
Carlos?
Yes.
So sorry to interrupt. If you can speak closer to the device, please. You're sounding very distant.
Okay. I will start again. Thanks, Jay. Good evening, everyone. I am pleased to join you today and present our financial results for the second quarter of full year 2022. We are operating in a high volatile and uncertain world with ever emerging disruption. Whatever this challenge comes from supply chain or from manufacturing costs, we have continued to provide solutions to address the pain points of the farmers globally, while delivering our financial commitments. These have been made possible through our strong backward integration, manufacturing capabilities, and our supply chain excellence. The strength of our team and our open ag network, whether through our customers or partners, has helped us anticipate the current challenge and has made us better prepared to effectively overcome them. Driven by our purpose, we are inspired to be agile, focus deeply on our customers, and grow sustainably, and just exemplified by Jay. We are also excited to announce that 2 new patents, among other pending applications, have been granted in Brazil on a novel 3-way mixture to support our soybean disease resistance management platform. These patents have been granted in 9 additional countries, including USA, Argentina, Australia, Russia, and European countries. Now, moving to the financial results, I am glad to report that our revenue as well as our EBITDA for the quarter have been shown robust growth. The revenue has grown by 18%, while the EBITDA have increased by 13% versus Q2 full year 2021. The increase in revenue was led by strong volume growth, enabled by our strong backward integration capabilities, along with improved overall price realization. Even though there has been a significant cost pressure on our key AIs in this inflationary environment, we have been successful in maintaining our gross profit to Q2 full year 2021 levels. Further, when adjusting our EBITDA for the nurture farm related investments, our EBITDA margin improved to around 20.1%, flat versus previous years, implying a 16% growth over Q2 of full year 2021. Now, let's look at the performance of our regions. In Latin, we registered around 21% growth, led by strong increase in volume. Brazil, the key country in the region, grew by around 27% versus last year, driven by volume growth of our key products and supported by improved price realization. Other sub-regions such as South Cone and Argentina also demonstrated robust volume-based growth. Furthermore, Mexico has managed to maintain its revenue versus previous year, despite prevalent several drought conditions. Looking to North America now, revenue growth was achieved through higher price realization, especially due to its upside on non-selective herbicide. This was driven by improved price realization, resulting in robust growth of 24% over Q2 full year 2021. Improved commodity price, tight supply for key products, and favorable channel stocks further enabled the strong performance.
Ladies and we request all the participants to please stay connected while we reconnect the management. Ladies and gentlemen, the line for the management is reconnected. Thank you, and over to you, sir.
Yes, sorry, I just repeat North America, as I don't know until when and where you have been able to have the information. In North America, revenue growth was achieved through higher price realization, especially due to the upside in non-selective herbicides. This was driven by improved price realization, resulting in a robust growth of 24% over Q2 full year 2021. Improved commodity price, tight supply for key products, and favorable channel stocks further enabled a strong performance. In Europe, we grew by a robust 31% in Q2 versus previous year. This strong performance has been achieved through a mix of favorable volume growth and higher price realization. Improved market conditions, including weather, led to accelerated sales in Q2. France, DACH region, and United Kingdom have delivered strong growth, driven by robust performance in fungicide, herbicide, and biosolution segments. Moving to India. India, we exhibit a better performance than the overall market in this part, despite general slowdown due to average 9% deficient rainfall and reduced kharif acreage for key crops such as cotton, soybean, and groundnut. Looking to the rest of the world, we delivered around 13% growth in revenue this quarter versus last year, despite the ongoing major supply constraints. Australia and New Zealand registered strong growth, led by the higher volume and improved price realization. Japan sales were comparable with the previous year, despite depreciation of the Japan yen. Among the regions, Africa and Middle East region registered big growth, primarily due to the unfavorable rains in part of Africa and overall supply chain challenges. But before I hand over the call to our global CFO, Anand, to provide more details about our Q2 financial results, I'd like to congratulate our team for their resilience, dedication, and unified focus to deliver this strong performance in Q2, despite challenging on several fronts. Up to you now, Anand, please.
Thank you. Thank you, Carlos. Thank you very much. Good evening, everybody. I'm taking as read the presentation, which is put up on our website, and having read the safe harbor statement. I'll begin with providing you the key highlights for the second quarter and first half earnings, and then take you through the detailed financials. The performance of second quarter is a true reflection of company's resilience and strong business model that helped us deliver strong results amid the global supply chain disruption and a tough environment. This was enabled by the backward integration and end-to-end manufacturing capabilities for our key products and, of course, the agility of our team. The Q2 performance highlights and Q2 P&L highlights are as follows. Talking about the key financial metrics for Q2, we ended the quarter with revenue of 10,567 crores, an increase of 18%. What is most heartening to mention here is a 15% growth in volume over that of the same quarter in the previous year, and 3% due to price increases, which primarily started coming in September 2021. Talking about gross margin for Q2, the impact of 85 basis point increase in freight and 96 basis points on account of geographical revenue mix. The higher sales, this revenue mix was largely on account of higher sales in Brazil, given the strong demand and the increasing acreage. However, I would also like to add here that the gross margins, including Brazil, and they were still lower than the company's average, thereby impacting our overall gross margins. So, in spite of the above two factors impacting the gross margins by almost 180 basis points, the gross margins for the quarter were at 39.7%, same as that of the previous year. In reality, therefore, our gross contribution increased if we were to take aside the increase in freight, which is exceptional for this quarter, as at the same time the revenue mix. On the fixed overhead side, as the world is moving towards normalcy post the COVID global pandemic, we are seeing increase in travel, marketing and advertising spend reaching close to the pre-COVID levels. In addition, we also continue to make long-term investment in the digital platform, and for Q2, this was rupees 81 crores. As for EBITDA, keeping aside the investment in digital platform, which are long-term in nature, we delivered EBITDA growth of 16% over that of the previous year, and EBITDA margins were at 20.1% for the quarter. The reported EBITDA stands at 2,045 crores, a growth of 13% over last year, and the EBITDA margin at 19.4%. The finance cost for the quarter is at 359 crores against 343 crores in Q2 last year. Of this, the interest cost on borrowing has reduced by 57 crores over that of the Q2 of the previous year. As mentioned in the last quarter, where we had MTM mark-to-market impact on hedges on advance orders, particularly in Brazil, these have been winding down with the execution of orders. In addition, the BRL depreciated during the quarter by 8%. It moved from 5 as of 30th of September, 5 to a dollar, 5 BRL to a dollar, to 5.4 BRL to a dollar as of 30th September. On the tax line, the tax rate for Q2 was at 23%, higher than Q2 last year, primarily because of the increase in profits in Brazil as a result of reversal of mark-to-market losses from Q1 on advance orders, as we start invoicing of the products with the beginning of the sowing season. Overall, full year tax rate is expected to be at the lower end of the guidance of 15 to 18%. Net profit for the quarter stood at 633 crores versus 464 crores, which was lower than the market expectation, mainly due to increase in taxes, as explained earlier. H1 performance highlights. On H1, there was again a strong increase in revenue, with the overall revenue growing by 14%. Gross margins were marginally higher at 41.5 compared to that of H1 of the previous year. This, of course, was after considering the two impacts, as I mentioned, touched upon them earlier, which is the impact of freight costs as well as the regional mix. Without considering the above two impacts, the gross margin would have been at 43.4%, around 200 basis points higher than that of H1. Our fixed costs on investments in digital platforms for H1 were at 124 crores. EBITDA without considering the 124 crore investment in digital platform is 14% versus H1 last year, and H1 EBITDA margin stood at 21.1%, almost at the same levels as that of the previous year. Finance costs, which increased by 72 crores, is mainly attributed to the exchange impact and the NPV adjustment for long-term payables in line with the IFRS accounting standards. The interest of borrowing has gone down by 56 crores during H1. The effective tax for H1 is at 6.5% and will remain within the guidance range as mentioned earlier. Moving on to working capital. The net working capital days stood at 114 days, higher by 8 days compared to last year. The payables as of September 2021 increased by 14 days, while inventories increased by 12 days and receivables increased by 10 days. We expect the net working capital days to be around 80 to 90 days by end of the financial year. Cash flow and debt position. As mentioned earlier, our debt obligation is being serviced efficiently, demonstrating a commitment towards our bankers and stakeholders at large, and we remain committed to reduce our debt and maintain investment-grade credit rating. The gross debt and the net debt as on 30th September 2021 stood at 27,146 crores and the net debt at 24,279 crores. The net debt increased by 430 crores over that of the previous year's same period. However, it increased by 5,358 crores over March 21. We maintain our guidance to provide at the end of the year to bring down the net debt to below 2 times that of the net debt to EBITDA. Overall, we believe that we are well placed and will continue to deliver strong results. With this, I will hand over back to the moderator.
Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Veera from Abacus. Please go ahead.
Hi, sir. So just wanted some feelers about the current ongoing season in the Latin America.
Ongoing season in Latin America.
The ongoing season, if we get Brazil, the planting season starts and it's moving very well. The weather is very good. Farmers are very motivated. The same for South Cone and Argentina. Mexico have had a very tremendous result in the Q1, but Q2 has recovered, and we are believing that Mexico will be able to recover the numbers as per budget until the end of March 2022. In general, the Q1, Q2 for Latin America, except Brazil, have been more difficult, except Argentina, South Cone, Brazil, because of this drought in the Mexico and Central America. But we are very confident that our deliverables in Latin America.
Sure. And sir, in terms of the given the current glyphosate prices, how is the demand shaping up vis-a-vis that?
I'd say this is a quite good opportunity for us now, because glyphosate is the main herbicide in the world, is the biggest use in volume in hectares, and the price of glyphosate moving up and scarcity, not availability. It's demanding and shifting demand to products like our Select or some other products that we have, some of our solutions, like Select, like a glufosinate, like some of our pre-emergence, our S-metolachlor that we have just launched. Say the herbicide perspective, it's very, very good and open up a lot of opportunity for us. And some of our AIs, we are sold out because of the demand is very high.
Sure. This is helpful, sir. Thank you.
Thank you. The next question is from the line of Probal Sen from Centrum Broking. Please go ahead.
Thank you for the opportunity. With respect to the guidance that you again reiterated for the full year, H1 performance very clearly is running ahead of that as of now. So should we interpret the guidance as just being conservative as of now, or is there some wrinkles that you see on the horizon because of which the revenue growth guidance is, still maintained at around sub 10%, where we are running at 14-15% as of now for the first half? That was my first question.
Yeah, thanks, Prabal. I mean, as you know, we generally give guidance at the beginning of the year.
Sure.
Things keep changing. While clearly we do expect the revenues to be higher than what we have guided, which is 8 to 10%, there's no doubt. And we do expect also to have good improvement in EBITDA. But I'm sure you're well aware of the uncertainties which we are seeing in the world in terms of supply chain and other things. Although I must say that we are very, very well covered because of our manufacturing assets that we have, and most of the key products we manufacture ourselves, so we are very well covered. So, we are hoping for the best. As Carlos said, we'll certainly be at the upper end of the band, but we generally don't like to change the guidances in between of the year. Although we are very, very optimistic to be, if I have to say much about the guidance in both revenues and earnings.
Sure, got it, sir. That's useful. The second question was with respect to the just on the domestic business or on an overall basis as well. What kind of product launches have happened in H1? How many new products have been launched, and what's the sort of schedule that we have maybe for the second half of the year?
We have launched products in a lot of different parts of the world now, and there are a lot of products to be launched in the next months until the end of the year. We are predicting to keep our innovation rate in the range of 20+%, as we are keeping these launching in a very important way. One of the key launches will be our AAA mixture of fungicide in Brazil, Evolution. That is a really very unique product, a very unique formulation, very unique mixture, and we are very positive with that. It's the first year, and this product is part of the family of MMX that we have already launched many products in that platform, like Unizeg Gold, like Tridium, like Trizima, like Chloe, and now Evolution. And we have other ones coming in the future. I'd say, but it's moving quite good.
Yeah, in case if you're specific about the India domestic product, we also have our global CEO Farooq Hilu on the line, CCO. So Farooq, in case you can add a few more color to this.
So thank you, Anand. We do have some. We have a triple way seed treatment which is very upbeat about. There is also a two-way insecticide that we are pretty hopeful of in the next Rabi season. So there are a few lined up. Once we launch, and we would disclose more information about them.
Okay, Farooq, thanks. Thanks, Prabal.
Question, if I may, what sort of capex guidance have you given, if at all? I'm sorry if I missed that earlier. X of any acquisitions that may or may not be there for 22 and 23.
Our CapEx guidance was about $300 to $320 million. This is, I would say, 60% towards product registration and 40% is towards putting up physical assets.
This is for this year, sir? This financial year?
That's right. This is for this financial year.
All right, sir. Thank you very much. I'll come back if I have more questions.
Thank you, Prabhu.
Thank you. The next question is from the line of Girish Achhipalia from Morgan Stanley. Please go ahead.
Thanks for the opportunity. I have just two questions. One was just the pricing environment. How has that been given the inflation that we've seen? And are there any specific pockets in the second half where you think there could be some pressure continuing? And the second was just a vision question around Nurture Farm as to, how do we look at what kind of capex or investments are we expected to do this year and next year, and how do we think about it slightly more medium term? Thanks.
Thanks a lot. I'll take that. So as far as the pricing, there has been a complete disruption. UPL is probably the most backward integrated company in our industry. There is a huge disruption of supply from China because of all the reasons which are well known, including power, the Winter Olympics and various other issues going on there. We feel quite confident that all the cost increase will be passed down to the market because there's just no way to be able to absorb some of the costs which are increasing dramatically across the board. We are while there are some ongoing commitments which have been made, but most customers are absolutely open to and understanding that there is a kind of a force majeure in the environment, and we are able to see the price increases month by month. So we are quite comfortable with passing that through. As far as Nurture Farm, it's an ambitious project which is transforming the agriculture space in India with digitizing a lot of the aspects of their operations, and we're very happy with the adoption of our digital platform. Most of the services are being ordered. 90% adoption we've had on our platform for various aspects of our initiatives, and we are going to continue to invest about 50 million a year, give or take, for the next couple of years at least, and then we will review that.
Thank you. I'll join the queue.
Thank you. The next question is from the line of Vishnu Kumar from Spark Capital. Please go ahead.
Good evening and thanks for your time. Circling back on the same question on margins, two questions. One, when do we expect some respite in the cost in China? Second, from a pricing front, should we expect some uptick in pricing in the next 2 quarters?
Maybe Raj, our global head of supply chain, is on the line. Maybe Raj, you can answer the first part, and then Carlos will answer the second.
Yeah, thanks, Anand. No, I mean, we expect that China situation should normalize during the next calendar year, sometimes early part of the next calendar year. Because of this energy crisis, we don't see things getting any better, at least till end of this year for sure. And next calendar year, we see some normalization happening. So that's on the cost side.
On the price uptake, Carlos, maybe you can answer.
Yeah. Thanks for the question. We have been increasing price in consultation with our customers who are aware of the current situation to ensure that their requirements are fulfilled. So we have a very strong customer intimacy, and we have been able to sit down with the customers and work together with them to understand their needs, to understand their problems, and to make them understand the moment to do. And they are aware of that. They are aware of that, and we have been able to really ensure and work together with them to find the best solution. And these have been working in a very positive way. You know, we are also trying to help farmers with alternative solutions like biosolutions, functional equivalence technologies that we are working to help them to overcome this moment.
And Vishnu, just to add to what Carlos said, you know, I mentioned in my commentary that this quarter we could start taking price increases somewhere from mid-August and in September. So we did see the full impact. We will see the impact of full price increases in Q3 and Q4 as we move forward.
Yeah. But we have been able to manage that because of our relationship with the customers and the way that we care about that. And as the man say, we will see that more effectively in Q3 and Q4.
Thanks, Vishnu.
Got it. So just one question on the taxation-related commentary in the notes, with specific ones with the management and control from India. Which subsidiaries are there, and any potential impact that you could just highlight?
These are basically subsidiaries out of Mauritius and Gibraltar. And we don't, we are challenging the orders, the information requests and other things, because we do believe that there is no real case for us, for them to raise these questions. So we'll be taking legal advice, and we'll be providing capital to them.
We don't see any.
Thanks a lot, sir, and all the best.
Thanks, Vishnu.
Thank you. The next question is from the line of Tarang from Old Bridge Capital. Please go ahead.
Hello, good evening.
Good evening.
Two questions from my side. One on the Chris Hansen collaboration. What's the significance of this, and what factors do you think that might have worked for Chris and UPL for this collaboration to come through?
UPL is number one company in the biosolutions place. We today with our NPP platform, we are a market leader in most markets and most crops in the biosolution place. We have clear focus on that, and a company like Chris Hansen is looking for partners. In fact, they have actually walked away from existing relationships in some of the markets and moved their existing portfolio to us, like in the groundnut market in Argentina. And our whole ProNutiva concept, which is a combination of bio and the traditional chemical business, is finding great acceptance among the agriculture sector. Also, with our focus on sustainability and our focus on sustainable agriculture practices, this concept is being accepted very well. The Open Ag platform, which is really collaborative by its inheritance, is something which is helping us really open doors with many other companies, not only Chris Hansen.
Thank you. My second one is on Nurture Farm. How are you generating awareness on this, and are there any competing platforms, and what's differentiating about Nurture Farm?
So Nurture Farm is a grassroots level. The awareness is with farmer. There is direct contact. UPL has a huge presence on the ground. We have ProNutiva villages, which are platinum gold villages, where we have more than 70-80% market share. Last count, there was close to 100 such villages. So we have a lot of grassroots connect at the farm. Our whole business is moving from selling products to selling outcomes, and we are with the Nurture platform. We are actually working towards offering farmers outcome rather than just products, and that allows us to have a much more stronger relationship and also a much stronger trustful relationship with the farmers.
Okay. And are there any competing platforms?
You tell me. I don't know.
No, I'm not aware. That's what I'm asking.
Even I'm not aware.
Okay. Okay. Thank you.
Thank you. The next question is from the line of Varshit Shah from Veto Capital. Please go ahead.
Hi, and congrats on a great set of numbers. So my question is actually twofold on Brazil. So we have seen a tougher year, tougher previous season in Brazil, and so I just wanted to know what is the channel inventory for the industry as a whole in Brazil and for UPL. And second, how many more quarters of price increase is required to compensate for the current government-related inflation in the Latin America market?
So channel inventory in Brazil and
The Brazil business, it's have been a challenge because we have taken these anticipated orders, but because of our relationship with the customers, the way that we have been able to manage that, explain the difficulties and how the situation that is there, has been more challengeable. But we have been working very close to the customers to overcome that. And the inventories is reducing now that the season has started. So the planted area of soybean will be increased for more than 40 million hectares of soybean. Corn area is increasing. Cotton area is increasing significantly. Say the inventory in Brazil at the end of this season or the end of this year potentially be one of the smaller in the history, because farmers, because of the constraint of product availability, will be trying to use as much as possible their inventory. So we are predicting a very low inventory at the end of the season in Brazil. And inventory now it's moving to the farmers and as price of soybean is quite good, cotton price is quite good, corn price is very good. And so we believe that inventory will be very low at the end.
Sure, that's really helpful. And how many, just for clarification, I missed, I think, how many more price hikes are required to cover the inflation which there to get your gross margin to the desired level in Brazil and overall that time?
How many more price hikes? So I'll say it's like this, based on the cost inflation, we are, as Carlos mentioned to one of the earlier answers, we are in a position to pass on the cost increases. Now, as most of the peer group companies are facing these challenges, more so because of the supply constraints, it is becoming even easier to push on the prices, because what the farmers/distributors are looking for is regular supplies of material. And because of our backward integration and end-to-end manufacturing of key molecules, we are in a very advantageous position on this aspect. So we are taking price increases. Of course, I cannot give you one price increase across all of this, but we continue to take price increases as and when we see if there's a cost increase pressure or increase in logistics costs or any other such issues.
Thanks and all the best.
Thank you, Vasu.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang. Please go ahead.
Good evening, and thank you very much, and the best of season's greetings. The first thought is in terms of the strong performance in US and Europe, particularly Europe, because first quarter was disappointing. So, what explains the strong performance in Europe and US? How much of this is driven by volume growth?
It's a combination of volume and price, and it's It's like our growth, 15% growth in volume and 3% growth in pricing. In Europe and in US, it's proportionally the same. The demand in US, because of the price of the commodities are so good, and US have had a quite reasonable harvest. Farmers are very excited for the next season, and the needs. See, our product portfolio, it's very in line what the customer needs in Europe, in US. So all the work that we have done to develop the product portfolio, back integrated the right products. Now, so we have done the good choices. Now, if you see the choice that we have done to invest in glufosinate, to invest in ethanol, to invest in different molecules, have been the right decision at that time. No, and because these kind of decisions you don't take in 1 year. This is a long-term decision. Is a planning. Is a vision. No, and Europe in US is very much that. And we have growth consistent in the key molecules that we have in Europe and the key molecules that we have in North America. It's a very, very consistent, very good, and as volume and pricing as both.
Okay, and the second thought is in terms of your sustainable and biological solutions in the second quarter, what the kind of growth and traction you are seeing there?
I'd say we are looking, as we have announced in some of our meetings before, our drive is to arrive in 50% of our sales with a differentiated products and bio solution products. See, our drive is to move in that direction. Our growth in differentiated products have been higher than any other area of any other portfolio. See, we have grown much more in differentiated solutions than in post-patent, in Me-Too products. And we have been able to have a double-digit growth in biosolutions, even though the frost in Europe and the drought in Mexico, we have been able to grow double digits in biosolution, and we are trustful that we will keep that growth until the end of the full year 2022. I believe this year we started demonstrating the importance of launch of NPP, our natural plant protection company. And this focalization, the launch of the natural plant protection company is giving us the focus that we need, is giving us the platform that we need to really grow biosolution in the level that we have planned.
Thank you very much, and wish you all those I shall join with you.
Thank you.
Thank you. The next question is from the line of Abhijit Akella from IIFL Securities. Please go ahead.
Yeah, good evening. Thank you so much. Just a couple from my end. One is on nurture.farm. We are making significant investments here going forward for the next several years. So, any thoughts you could share regarding the possible monetization plan we are looking at, and how valuable could this be in coming years?
So we are building a digital platform which is really engaging farmers from all their challenges and some of the pain points, because we are transitioning from products company to more a solution provider. And this is an exciting journey. We've had fantastic, much better than expected traction. We are seeing across the board, in every value chain we look at, because this works on a value chain basis, we are seeing a tremendous impact on yield, and we are able to make for the farmer. We've just closed the groundnut season in Gujarat, and we saw a 30 to 40% yield increase for almost 300,000 acres. So everywhere we are seeing tremendous growth. There's response which we got for the CRM, what we call is End the Burn campaign around Punjab and Haryana. We also saw huge, we were restricting the number of farmers we take on that platform. We saw tremendous response, and we feel that while we were targeting 3x the growth next season, we think we'll be able to cover more than 75% of the acres next year. And all these farmers on board digitally. So this platform is growing. We have over the last 18 months hired almost amazing pool of talent in our nurture office in Bangalore. We've grown that from one floor to, I think, almost 3/4 of one floor to 3 floors, and his bustling office with almost 300 people close to, of young, talented guys who are really excited about the impact they're making in agriculture. So right now we are just building this platform. We'll see what to do with it later. There are other companies also wanting to engage on it. There are some discussions going on. Some products are on the platform. So, lots happening there. No plans for anything right now, but we know that this is the future of agriculture. It has to be digitized.
Thank you. That's helpful. And second question, just on the margin outlook. We've had this target of 3-4 year target of achieving say 24-25% EBITDA margins at the consolidated level. So in the context of these investments in say nurture and other areas, as well as the input cost pressures, do we believe we are still on track to sort of deliver on that 24% plus in the next 3 years or so?
Yeah, absolutely. This year was a very difficult year in India in terms of weather patterns. The growth got a little bit muted. A lot of crops were disrupted. So there was some pressure. Plus, we had a large investment in some of these platforms. Also, transitioning farmers from traditional chemicals to bio products is a slightly more costly exercise in terms of SG&A. So that's taken up some more investment. But all these things in a normal year would not even show up, because if we talk about normalized growth in India of 15, 20, even 25%, these all things would be absorbed within the existing kind of cost structure. Saying that we have to invest in the future, and we will continue to invest in the future. So, these are all assets which are much more valuable than the money we are putting in.
And just to add here to what Mr. Shroff says, I believe these are all done to accelerate. In fact, if at all these investments will speed up our reaching that target of 24, even higher in a shorter period of time.
Got it. Thank you so much, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Ritesh Gupta from Kotak Securities. Please go ahead.
Hi all, thanks for taking my questions. Just on the market share bit, you already have about 19% market share in the global agchem market. Is there ambition that you have, let's say, over the next 5 years or so, that you would like to articulate in terms of the amount of market share that you want to take? And then, secondly, on the margin side as well, I mean, we do see that you do import some of the raw materials still from China, and probably like things like yellow phosphorus are probably for that you are probably dependent on China in every case. Any way you could reduce that dependency, and how Q3, Q4 will look like given the kind of situation we have seen in China in the recent, especially on this material?
Let me answer that first on your second question on the yellow phosphorus. We actually don't import any yellow phosphorus from China. right? We have alternate sources. We don't import any yellow phosphorus from China, so we are not dependent on China for yellow phosphorus. That's number one. And as far as the yellow phosphorus is concerned, we are adequately covered for the next 2 quarters. So I don't see any worries in terms of coverage or supply security is concerned, right? So that's on China. On market share, I think.
I didn't understand your question. What was the first part of the question?
No, so you already have about 9-10% market share after the Ristas acquisition. So do you want to articulate any kind of market share aspirations you have over the next 3 to 5 years?
We are, over the last 10 years, UPL has been the fastest growing company in the industry. So typically we gain market share in almost every market we operate in every year. So steadily we'll continue to gain market share, and we believe that in a period like this where commodity prices are high, markets will also grow. Farmers tend to overinvest. So while we are, today UPL is number one company in many parts of the world, including India, Mexico, Chile, Colombia, South Africa, and in many other African countries. We believe that leadership requires other responsibilities, and so we are continuously investing in innovation, not only in our portfolio, but also in our way to go to market. And that whole transition is going to drive the whole change in the industry. And I believe that industry will continue to consolidate. Because we believe that the farmers are not really interested in buying products, they are interested in outcome. And UPL is thought leader and market leader in that whole concept. So we believe that consolidation will drive a market share rise, not only for us, but the rest of the top 5-10 companies.
Sure, that's helpful. Just one small follow-up on the yellow phosphorus bit. How much proportion of global yellow phosphorus production comes from China and from other countries, if you have it back of your mind?
We don't buy any from China, so.
Okay. Thanks.
Thank you. The next question is from the line of Vijay Sangvi from Pragya Equities. Please go ahead.
Hello. Thanks for the opportunity. Since the last many quarters, promoter stake has remained stagnant, any plans of infusing fund or increasing promoter stake?
I mean, slow and steady, we will increase promoter stake.
Okay. It's around 28% right now. What's the stake will increase
At
to?
this value, I want 100%.
Okay. Thank you.
Thank you. The next question is from the line of Matthias Wamel from Blue Bay Asset Management. Please go ahead.
Hi, thank you very much. Hopefully you can hear me all right. 2 or 3 questions from my side, which are more debt focused. The first one is, clearly and understandably so, the working capital usage increased a little bit this first half of the year. Are you kind of comfortable and in seeing that reversed online with the seasonality of the business for the kind of second half? And then 2 related questions is, can you tell us what was the outstanding amount of your receivable sales at the end of this first half of the year, and what are you targeting for the full fiscal 2022? Thanks.
Hey, Matthias, thanks for joining us on this call. We remain confident of having working capital in the range of 80 to 90 days, between that range at the end of the financial year. And these elevated inventory levels are super beneficial in situations where there's a supply shortage, at the same time the other supply chain disruptions. So we remain very optimistic and confident about that. I think the receivables outstanding, the securitization as of 30th September was in the range of about 600 million. And against it was about 50 odd million low, higher than that of last year same time. That's the number.
Okay, perfect. And do you have a sense for the full year figure?
We should be in the range of, we are targeting about 1.1 billion to 1.2 billion, about 100 million more than last year's numbers.
Okay, perfect. Thank you.
It will depend on, Matthias, it will depend on also how the interest rates behave in Brazil. You would have heard today morning again, last night they increased their Selic rate by CDI rate by 1.5. So if it gets too expensive, then we will not do much of securitization.
Okay, perfect. Thank you very much.
Thank you, Matthias.
Thank you. The next question is from the line of Deepak Chitroda from Phillip Capital. Please go ahead.
Thank you. Thanks for the opportunity. And first of all, congratulations on the good set of numbers. My first question is about, as the commodity prices are on a higher side, if you talk about, across the agri inputs, including agchem and fertilizer, seeds and all. So do you think that, probably not in the near term, maybe after 1 or 2 quarters, that farmers will become very cautious and, that is indirectly going to impact their margin as well? So probably indirectly that can, impact the overall, the demands or volumes.
Yeah, I can take that. I'd say if you see what could be the strategy of the farmers would be to manage their fertilizer, because a lot of farmers have fertilizer in the soil, and they could reduce the rate of fertilizer, or in some situation minimize that in an important way. On the crop protection side, they doesn't have a choice, because at the time that you buy a seed, that you invest in the seed, and the farmers needs to invest, they buy a low value seed, it will be even worse. So they need to have a yield. If they do that, they need to control the weed. They need to control disease. How they can manage without control disease? They need to control the insects. How they can manage without the control the insects? To say what could happen is some shift in technology. Now let's say they will try to use a little bit lower value technology, and this could be even favorable to us because we have both. Now we have a more let's say not so expensive technology, and we have the premium technology too. Say I believe will be a mix. Cotton growers, with the price of the cotton that we are seeing now, cotton growers we will use as much technology they can, because the price is quite good. Potentially corn growers will be more selective. No? Soybean growers will be normal because the price is still $12.5 per bushel. No? If you see price of the specialty crops, coffee, it's an amazing price. Say one of the, it's in the high level of historical price of coffee. Say demand for citrus very high. No? Say we see that the farmers will use technology. They will potentially minimize the amount of fertilizer in a strategic way.
Sure. And my second question is about our biosolution business. So as I understand, we are aiming to have a contribution of almost close to about 50% we are targeting towards a differentiated product. So in terms of biosolution product, as I understand, we have larger contribution, I think initially from the European region, but now with the Arista integration, almost like 2 years now. So how big is the penetration across the other regions like Latin, North America, or Asia?
Yeah. The critical part of the biosolution is the presence, now to be present closer to the farmer. And this is with the integration of the two companies became a very strong base for us. Now, say we have presence in 138 countries. We are in the ground closer to the farmers. And with the launch and the separation of NPP as an entity inside of UPL that will be completely dedicated for the biosolutions, the speed of growth will be increased dramatically. So we have launched amazing team. We have launched amazing brand. To see our NPP brand is beautiful. It's really unique. And we are working a lot with this life that the biosolutions create. Now, and as Jay have pointed out, our focus in reimagining sustainability, our focus in carbon sequestration, our focus in soil health, it's something that it's creating an environment to us to really grow, and we be able to teach the farmers, to help the farmers to be more sustainable. Using Pronutiva approach, that we use the chemical when is needed, we use to explain that to the farmers. It's like that it's like ourselves as a human being. We take our vitamins, we take our probiotics, we take everything that is possible to minimize the use of antibiotic. But when you need antibiotic, you need to take the antibiotic or you die. It's the same what we are doing. We are working to make the plants more resilient, make the plant more healthy, and then the farmer can use less to do more. And that concept is our concept of Pronutiva, that we use the best of both. How we can manage to apply our biotechnology approach, our biosolutions approach, and use the chemical as needed. Now, I'd say that is the concept. This is why we believe that by 2026, 50% of our sales will be differentiated solution and biosolutions together. In our post-patent technology or Me-Too technology will be less than 50%. That is our focus, and we are in a good movement in that direction. And we are having amazing support from our partners, like Christian Hansen that Jay was explaining. That is an amazing partner for us. It's a great partner. And we have many others that we are working together.
Thank you. Ladies and gentlemen, we take that as the last question. I now hand the conference over to Mr. Anand Vora for closing comments. Over to you, sir.
Thank you. Thank you, everybody. Thanks for joining us on this call. If you have any follow-up questions, please feel free to reach out to Radhika or myself, and we'll be happy to answer them. Thank you very much. Have a great evening.
Thank you. Ladies and gentlemen, on behalf of UPL Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.